All right, you're looking at a daily chart of the Nasdaq. Welcome to my weekly review. I wanted to point out a couple of things here. First of all, the Nasdaq had a 31% gain here from the lows on March 13th to July 19th. But I wouldn't consider, that's from trough to peak. And now from 1446, it had a 9% correction. But I would more consider this like a cup with handle breakout here on the May 10th, May 10th breakout, which was this date right here. Right there was the breakout, and it had an 18% move from that breakout day. So if you take the May 10th breakout, which I'm going to call that, breakout from a cup with handle pattern, and it ran up, 18%. So now it's retraced half of that move. That's a 50% retracement. And on Friday, we had a pink rally day. So even though the power trend was turned off and somewhere Mike Webster is weeping, there is a silver lining here as we had a pink rally day. Mike will get the he'll get the hint there on what I'm talking about. I want to take a look at the S&P, because the S&P still does not have the power trend turned off. So there is hope, right? The S&P is doing a little better than the Nasdaq, and you can see that even though the 21 looks like it's going to cross and close below the 50, it hasn't done so yet. So there is hope. And with the Nasdaq, I just wanted to point out that it's already retraced 50% of that move from the breakout from May 10th to July 19th. So it had a nice 10-week run, and now it's pulled back for the last month from July 19th to today's August 19th. So, and like I said, we had a pink rally day on Friday. So maybe we look for a follow-through day starting, Thursday of this week. Something to, look for. One thing that does bother me, though, is that these three inverted hammer candles right in a row, Tuesday, Wednesday, Thursday. It's just the sell-off was pretty fierce last week. And since it's a weekly review, I should show that it was down 2.59%. And during this correction here, with the Nasdaq down 9%, a lot of your growth stocks are going to be down twice that. That's normal. And you're probably going to get shaken out with a 20% move, or at least, take profits. I sold my laggers and trim my winners. I mean, you have to do it. We cannot control the markets, but we can control our exposure to the markets and manage that risk that we have, and every time you put $1 in the market, it's at risk. There is no safe haven, not even Apple. You could see this one after earnings sliced its 50. And this is why I, sell my stocks when they slice to 50, because I can always buy them back, and I don't know how low they're going to go or how long this is going to last. So the 50 there was 187, and now it's at 174. So I would have saved myself $13 had I owned Apple, which I do not. Meta is another one of these magnificent sevens now, trading below their 50, showing weakness. I mean, there's a ton of carnage I can show you here. I don't want to get too morbid here with this pullback. It's a garden variety pullback so far that I showed you on the Nasdaq, a 50% retracement from the breakout. And this is Tesla here with the head and shoulders, the Gumby shoulder on that right side, which I've explained many times. But I could go through all the carnage. I don't really want to. I want to look at some of the stocks that are holding up and doing a little better here. This is one of the Magnificent Seven, Amazon, which traded down to its 50. And hopefully we'll find support there. More will be revealed. We're going to have to wait till next week and see what happens here. And then Google, it did slice its 21, but it's holding up, better than most, near a buy point there for the Google, if you're into such things. Anyway, I'm going to get away from the Magnificent Seven. I'm going to show you some carnage, but I'm going to keep it on a positive note here, because you got to stay positive. We're going to take you down a negative road and bring you back on a positive track here. The home builders, which were on a major roll here, and I believe we don't need to know why stocks are selling off. We just know that they are. Typically I buy stocks on fundamentals and technicals and sell into technical, and that one sliced its 50. I don't need to know why, if it's mortgage rates or whatever. Maybe their future growth prospects are dimming. I don't know. I just know that that's a hell of a move. But It's still 14.5% off of its high. Yeah, it was down, 9.3% last week. Still a stock I'm interested in and watching, but that's quite a move. That's quite a break of the 50 that I'm not really interested in. DR Horton did the same thing, sliced its 50 with volume, had a little dead cat bounce on Friday, but it's adios muchachos. I do not like giving back profits, and Lennar did the same thing. Maybe these will form a base. I don't know. Just gotta watch and see what happens with the home builders. I'm going to move on. Enough carnage. I'm going to go to some of the things that I like, some of the stocks that I'm looking at, some of the more stronger stocks. And this is Arista Networks, and this one's setting up in a base here. And you could see, the pattern of this, bases, and it, trades higher, then it forms another base. This is kind of a base on base pattern. This consolidation's only been 9 weeks. But while the Nasdaq has been floundering, this one's only 5% off its high. It was up 3% last week when the Nasdaq was down 2.59%. So that is definitely showing relative strength. Another one that I like is Vertiv Holdings, data center stock, and those stocks have been doing well. You can see this one's had, heck of a move, a big move, and holding its gains. If I take a look at the daily, you can see that it is above its 10 EMA. So that's pretty strong in a market where the Nasdaq was down 2.59%. This was up 1.3% last week. So again, showing strength in the weak environment. Extreme Networks, this one was down 12% last week. Ouch. 14% below its high here, and you could see that it bounced. It broke out of a base and pulled back to the 50 for the first time since breaking out of a base, which is not a magic elixir, but oftentimes it'll find support there. So we're just gonna have to wait and see next week how that one does. Anyway, that's enough of the technology, computer, networking, data center stocks. I'm going to get to the drugs. Eli Lilly, I bought NVO, I've had NVO, and I should have bought Lilly, right? But I'm not going to change lanes in the middle of traffic. I'm just going to stick with what I have. This is Lilly, though. Definitely this one of the stronger stocks I can find up, 3.5%, while the market was, really struggling last week. Yeah, 1% off of its high. This one is flexing like a peacock. NVO is the Ozempic, Wegovy drug, and they had strong earnings. You could see the strong sales and earnings growth, and it's holding above its 10 EMA, which is pretty phenomenal with this current market environment. And it was up 1% last week. And wait a minute, go back to that. Let's see here. No, I don't know. It's up 16%, and then that could be considered a short stroke pattern there on Novo Nordisk. Just noticed that on the fly here. And then AMGN is another one that it's a Dow component. You can see this, these big company, 140 billion market cap, with a big sell-off with their, they're trying to buy a company, the FTC got in the way. But now it's starting to recover here, and you can see the base on the weekly chart here. So it's just one that I'm watching, one that I'm interested in. And the XBI has just been terrible this year. And drug stocks have not done well as a whole, but I'm watching those three. Anyway, let's go to the retail stocks. ELF, it does this. People are asking, what's wrong with ELF? Well, that's what it does, right? It trades back to its 50. It's constantly done this. So it's within its character here. Would you rather buy it at 137 or 117 is a question I asked on Twitter. It filled this gap here that it had from earnings. So I think that's a positive. That you look at the 117.68 here on the earnings gap, August 2nd, it gapped up to 137, now pulled back. The low yesterday was 114.30. So to me, that's a positive. I don't know where it's going to go from here. I would expect it to find support. Estee Lauder had earnings on Thursday, I believe Thursday morning, and they expressed, real weakness in Asian markets. And ELF got hit with that report, but I believe they're taking market share. And the numbers, are pretty phenomenal for ELF Beauty. So I just got to watch and find where, it finds support and then bounces, and that's when I become interested in Elf Beauty. But it just closed its gap from the earnings report, the earnings gap up on August 2nd. So doing nothing wrong, really. It's writing character with what it does. It's just a sharp sell-off. It's kind of tough to take. Since it's a weekly report, I'm going to go back to Elf. Yeah, it was down 11%. That's pretty tough to take. Only 14% off of its high, though, so not bad. And you can see on the weekly, how pronounced that is, these pullbacks to the this is the 10-week line here, this red line. So it's not the end of the world. Just gonna watch that one, and I expect it to bounce. I was going to go to Celsius. These drink companies, people are going to drink regardless, right? And this one gapped higher and just pulled back to its 10 EMA, so it's holding its gains. The Celsius doing nothing wrong here. In fact, it's really strong stock. You can see the breakout, the move higher, and Celsius looks good. There's nothing left to say about Celsius. You can't buy it. I'm not going to buy it here, but it's holding its gains. This is COCO, which had this real wild action after earnings. Went up to 30.88, then down to 23 the next day. I mean, that's a pretty wild move. But now it's kind of stabilizing here, and it traded above its 50. As you can see, it pulled back to its 50 last week and found support on Friday. It was up 4%. So COCO beware. It looks okay to me. The drink stocks are doing pretty well. I'm not going to do the monster. I'm going to go to LULU because they're reporting earnings soon. And this one, you got to look at the weekly, because the weekly chart shows this consolidation here and just kind of like a sideways handle for a long, long time. Yeah, it had a 3 weeks tight here recently, and I don't know, looks pretty good to me. But it's gonna move with its earnings reports, and we've seen a lot of implosions here recently. So, like I say, you got to manage the risk. You can't control the market, but you can control your exposure and manage that risk around these earnings reports. You got to hedge if you're going to be long in these things, because the blow-ups are intense. This is Deckers, like what correction, right? This thing just keeps motoring along. A lot of these shoe stocks have been hit, like Skechers and Crocs, but this one just keeps grinding higher. So you ride the trend. Your trend is your friend till it bends at the end, right? So Deckers is looking good to me. They have earnings, I don't believe, until October. You can see on the weekly, the 3 weeks tight pattern here. In a normal market, I would be a little more interested, but I'm not really interested in exposing more risk in this current environment. But that does look good, the 3 weeks tight, and you see the volumes kind of drying up here on Deckers. So that one looks pretty good. I'm going to get out of the retail and go to a area of strength. We're going to go to the positive side here. This is the infrastructure plays. I'm just going to lump them all together with the air conditioning, the HVAC stocks, the power, the data center, the machinery. And this is a Sterling Infrastructure, gapped up on earnings, pulled back to its 10, and then found support on Friday and bounced, nearly 2.5%. That one looks good. Power, which is Quanta Services, PWR, I just call it Power, but it's Quanta Services, another one that's just, broke out and riding a trend higher. And if you look at the weekly chart, it's just lower left, upper right. Had a 3 weeks tight here, and it looks good to me. There's your 3 weeks tight pattern from it's a nice little tight range for a Quanta. Fix is one of these HVAC, the heating and ventilation, air conditioning companies. And you can see it broke out of a base, pulled back to its 50 for the first time, and it's just resumed its March higher, and it traded down to the 21 on Thursday and got a little support and bounced on Friday. So Fix looks good to me. Modine, another one that is in the same HVAC group, broke out of a base, and now it's just riding its 21, traded down below the 21, and then closed above it on Friday. You could see last week was down 10%. Still only 13% off its highs, and you could see the breakout, the move higher. Now, some profit taking, some selling. You got to expect that. especially in this market environment. You know, taking the profits. Caterpillar, another one that had a good, strong earnings report, and now it's being supported by its moving averages. You know, above the 21 in this environment, it's pretty darn good. Caterpillar is a big company and very strong stock right now. You could see that move with volume after its earnings report. Okay, so do I have any more of these? I do. PRIM, this is one that not talked about very much. Heavy construction. This is Primoris Services, and you could see the breakout, and it's just riding its moving averages higher. This is a pretty thin stock, you know, not real liquid like I like, but I have to notice this strength here. That is some real relative strength. And now I'm going to get to the stocks that I really don't want to get to. The oil and gas stocks. You know, oil and gas is they're doing well. I mean, you have to acknowledge the strength in these. This is California Resources, CRC. It's an exploration stock. You can see, you know, huge consolidation and now breaking higher, pulled back to its 10 EMA. That looks like a nice bull wedge right there on lighter volume. Back to the weekly. Yeah, nice long consolidation. So, but it's shown the ability to move. You know, always want to know if the stock has the ability to move. And this one moved, you know, that's a nice move. It does that again. I'm interested in that. Sign me up. Val is one that, once again, you know, big move, now consolidated. Had a 3 weeks tight recently. And it's just trading sideways, kind of a slower mover. But definitely, you know, it's an oil and gas drilling stock that those stocks are showing strength now. So you have to acknowledge it. If I go back to the weekly, you know, you could see this consolidation and just waiting for that one to break out. We'll see if it does or not. A slower mover. Weatherford is one of our leading stocks here, and this one's just trending higher after the breakout. Pull back to the 21. Found support there on Friday, and it's only 3% off of its high. You know, as the Nasdaq was down 2-something%, this one was only down marginally, so it's showing strength in a weak tape. PR is Permian Resources. It's a exploration stock. You got to look at the weekly here. It's a weekly review, long consolidation, but once again, shown the ability to make these big moves, right? And now it's consolidated for a long time. So if it wants to move like that once again, I'm interested. You can sign me up. CNX, another one just showing strength. You can see the, you know, big blue volume bars. This one's being bought. It's nice consolidation here, but the right side of that base, it's been up, what, 5 weeks in a row? 1, 2, 3, 4, 5. So definitely one to acknowledge. You can see the relative strength, and that's another exploration stock doing well. And a couple of the drillers here, Seadrill, consolidated in base, now trying to push away out of its base, getting support by its moving averages. Just in the early stages of breaking out of this base here. And you can see this one's been up like 8 weeks in a row with some volume here. So somebody's buying that stock. It's not Aunt Sally. This is a Diamond Offshore, another driller, consolidation. This one's a little bit ahead of Seadrill. It broke out, you know, back here in, well, Marty, help me out here. Back in late June, and made this move. Now it's traded sideways, pulled back to the 50 for 1 day. Now it's resuming its uptrend, up 5% on Friday. So DO, Diamond Offshore, looking good. I have a question. Can we have a serious sustainable rally without the semiconductor stocks? I don't know. I don't think so. I think we need them, especially if AI is the theme for this new uptrend. So I'm a little concerned here. This is shaking my head. SMH, the semiconductor ETF does not look good. Sliced its 50. Of course, I've got to talk about NVDA because it's going to save the day this week, right? Traded below its 50 and now it closed at it. Just got to wait and see for the earnings on Wednesday. A lot riding on that, a lot of eyeballs on that, which makes me a little nervous. AMD. Slice its 50, looks real weak. A lot of these are looking bad. Allegro, yeah, slices 50. That one looks sick. And this is why I sell my stock when they slice their 50s. AMAT. Now this one, traded below its 50 and had a good report. And then on Friday, ramped up nearly 4% and closed above the 50. So there's hope for the equipment stocks and the semiconductor equipment. This is Broadcom, another big semiconductor, trading below its 50. So, these things can rally back through. You just got to keep an open mind, be flexible here. The Nasdaq pulled back, it's pulled back 9%, and this one's 10% off the high. So, it's holding up okay. I just don't like it below the 50. That's all. Anyway, I'm going to stop right there. Thanks for watching. And in honor of the great Steve Jobs, I have one more thing. Definitely want to keep it positive. Palo Alto Networks reported Friday after the close, and it upset some of the analysts because they had to work during happy hour. So they cut into their cocktail time. But this one on Friday, had some big volume, as probably some short covering there, but they reported earnings, well received. The billings were up. It's up 11% after hours. And you're wondering where that 50 is. It's at 237.50 here. So maybe on Monday, this thing can rally right back through the 50. And it's definitely something that I'm watching for. But it's one of the stronger, or probably the strongest cybersecurity stocks. And folks thought that it was going to go down like a Fortinet did. Fortinet had a terrible report and sliced its 50 and 200 all in one session, rallied up to the 200 and got pushed back down. So Fortinet looks like that was a good short right there. But Palo Alto did not follow in the footsteps of Fortinet. They had a good report, well received. So we're just going to see on Monday. Once again, keep an open mind. The Nasdaq has retraced 50% of that move from the breakout. I think that's important. The May 10 breakout, that was an 18% move, pulled back 9%. And if you got some dry powder, like I do, I'm waiting and watching. And I'm always want the markets to prove themselves. I don't jump in until I see these buyers, because right now we're seeing a lot of sellers here. So I need to see some buyers. There's too many sellers. Anyway, that's it for this week. Thanks for watching, and we never give up.